Hello and welcome to this Commerzbank webcast. China has made headlines again this week. In a rather thin statement, the Chinese central bank announced on Tuesday important changes in the way it determines the USD-CNY fixing rate, around which the market rate may fluctuate by ±2% on a daily basis. In setting the fixing rate, the People's Bank of China will refer in future to the closing market rate of the previous day. Consequently, market forces will have a much stronger impact on the yuan exchange rate than they did before. China has therefore given itself a new and freer exchange rate system. However, this also means that China's economic problems will also have a greater effect on the exchange rate, and China's economic problems are serious for two reasons. First, property prices are falling on a broad front. The huge oversupply on the property market suggests that the fall in prices will go on for a long time yet, and this will continue to weigh on the economy. Secondly, Chinese companies are heavily in debt. In the past 5 years, private debt has risen to 180% of GDP, which is one of the highest levels in the emerging markets. Sooner or later, Chinese businesses will begin to reduce the high debt and spend less on investment, which will put an additional damper on the economy. All in all, the economic risks in China are still clearly pointing downwards, so that the yuan in Chinese new free exchange rate system will depreciate against the dollar at a sharper pace in the coming quarters than we had previously anticipated. A weaker yuan is probably not enough, however, to stop the planned first interest rate hike by the Fed in September. Indeed, the influential New York Fed President Dudley has already expressed his understanding for yuan depreciation. So far, the German economy has been able to compensate for the slowdown in its China business. This has been possible due to more demand from the US, the end of the recession in Western Europe, and a revival of consumption in Germany. Even so, German companies will not manage this permanently, as China is simply too big. This means there are downside risks, especially for our 2016 German GDP forecast of 1.8%. Thank you very much for watching, and take a look at our Week in Focus for more information.